Now, with everybody comparing the current stock market to 2008, I do want to dive a little bit into that because I see nothing but doom and gloom out there. People are saying stocks are crashing, stocks are coming down, the stock market is on the brink of collapse. And if you let that doom and gloom kind of surround you and consume you, it absolutely will. And then all of a sudden, you're selling your stocks. You are giving up. You're leaving the market, and all of a sudden you made that a reality because we fed into it. Now, there is a huge difference, and there are several differences between what was going on in 2008 and what we're seeing right now. So in this video, I want to discuss some of the things that are affecting the market right now and whether or not we really are headed for this doom and gloom stock market crash that a lot of people are talking about. So if it sounds like something you're interested in, let's get started. What's up, everybody? I'm Clay. I'm here to make 2022 the best year ever. If you haven't clicked that subscribe button, make sure to subscribe to the channel. Join us, become a bro. We are here every single day, and we are growing our portfolios together. And look, if you're brand new to investing, you don't know how or where to buy stocks and crypto, you got a link in the description below for Webull. Super simple to set up your account. Any deposit, 5 free stocks. Any $1 crypto trade, $5 in free crypto. And then you guys get crypto exclusive exchanges down there if you want them. But look, we are facing very difficult times for the market right now. So honestly, if you're thinking about getting in, you are going to be getting in on a dip that will be talked about for a very long time. Now, knowing that the market is already, if you look at the NASDAQ, let's just talk over some statistics really quick. The NASDAQ in April has performed its worst month since I believe it was October of 2008. No wonder we're seeing comparisons to the stock market crash in 2008 and the Great Recession to now. NASDAQ performing its worst month since 2008. The worst start to the year in history for the NASDAQ. We are looking at unprecedented times right now, and I can understand all of the fear surrounding the stock market, surrounding stocks, and surrounding your investments. Now, I do want to point out a couple of major differences that I believe it was today, maybe yesterday, we were talking about in the live streams. And let's really quick, look at the Fed. The Fed is one of the major reasons we are seeing this pullback in the stock market and in all of these individual stocks. Inflation is running wild, and they are combating that by raising interest rates. Now, when you raise interest rates, it makes borrowing much more difficult and much more expensive. And the theory behind that is if we can raise interest rates, we can at least not stop spending, but we can contract spending a little bit so that people don't go out and buy the same amount of goods and services that they're buying right now. And of course, if they're not buying them, the prices will come back down because they have less money to pay for them. And in that way, they're combating inflation. That's the very, very broad look at the overall theory on why raising interest rates is able to combat inflation. Now, that is, it's drastically affecting stock prices right now because we are seeing a Fed that is willing to do anything necessary. And Jerome Powell stated that he is even willing to, send the U.S. into a recession in order to battle this inflation. Now, what does that mean? Simply, a recession is 2 quarter after quarter periods, 2 consecutive quarters where we have a contraction in GDP. Now, we had a contraction during the first quarter of 2022, and I would imagine with inflation continuing to rise and nothing getting better during this second quarter, I would imagine we do run into a second quarter of contraction, and the stock market, stocks may react to that. Now, I say may because the overall, economy is something that we do need to keep an eye on. Now, Jerome Powell, he points to major differences, and I want to talk about these major differences in what we're seeing now and in 2008. In 2008, during this Great Recession, jobs were extremely hard to come by. The mortgage-backed securities and everything that fell through on Wall Street back in 2008 led to drastic stock market declines, led to drastic declines in individual stocks as well, not just the market, but also led to companies drastically cutting costs by reducing the labor force. What we're seeing now is a drastic reduction in the supply of workers. Now think about this. We had all of our problems with COVID and the lockdowns and everybody wanting to work from home and all of that. And now it's shifted into the fact that there are roughly, I believe, 12 million job openings and a historically low unemployment rate right now. Now, that doesn't signal that all of the jobs out there are currently filled. That signals that the workers are not willing to search for jobs. I can almost guarantee, it's probably no different for you guys. I go to the restaurant and, they're short-staffed. I go to the grocery store, they're short-staffed. You can basically walk outside and see a weird hiring sign because everywhere is short-staffed. That is proof that, the labor force is not there right now. So the major difference in the economy we're facing right now and the economy we had back then is the labor market. There's so much potential right now that we did not have in 2008. And that is a very positive sign. And that is a sign we must look to, because when you start to talk about all of the fear that's going on in the stock market and affecting these stocks right now, it can become consuming, because inflation, maybe raising interest rates won't handle inflation the way that they want it to. And inflation might get worse before it gets better. That could lead to more downturns. Maybe Russia wants to act up again and cause more problems than they're currently causing. That could lead to more downturns in stocks and in the stock market in general, and crypto. Crypto's included in all of this. Supply chain issues. We so easily overlook the word lockdown now and just contributed to a supply chain problem when really, it's an infringement on freedom to lock somebody down. It's just, okay, you're in your house instead of in a jail cell. What's the difference? You've got all of these things that are becoming normal. And if we want the stock market to really thrive, if we want the stocks that we're investing in to really thrive, we have to make it through, as investors, through all of these things that are affecting this macroeconomic environment that we were in right now. And it's not going to be just a flip of a switch and everything's better. So to the doomers and gloomers out there, we may be in for some difficult times. Stocks may continue to fall. The stock market may continue to fall. But there is always, historically speaking, there is always a run after the dip. It is not the end of the world unless, of course, it is the end of the world. And at that point, I don't think we're going to care about the stock market. So knowing that 100% of the time, any bear market has resulted in a bull market that allows for stock market gains well beyond anything that was previously met, we are being served a buying opportunity. If you were looking at buying stocks, now could be the time. If you were looking at buying stocks at the perfect time, you have to weigh that out. We could see further dips. Maybe the stock market today was the low that we are going to hit. Nobody knows what the future holds. But if the future holds anything that coincides with the past, there will be a bull run, and it will result in stock market gains that we have not even seen yet. So I'm excited, even though we're dipping. I'm excited, even though stocks, the stock market, crypto, the entire crypto market, it's down right now. It will absolutely lead to buying opportunities. I want to know what you guys think. Down in the comments below, let me know your thoughts. The difference between what you're seeing in 2008, what you're seeing right now. The labor market was just one example of what you had going on there. If you guys are seeing something different, if you think we're near a bottom, if you think fear is peaking, let us know down there. If this button right here is still red, make sure to click it, subscribe to the channel, join us, become a bro. We are here every single day, and we are growing our portfolios together. ClayBro883 on Twitter and Instagram, Webull, Binance, Gemini, Crypto.com. Until the next time, hope that each and every one of you have an awesome day.